business under the District Industry Center, and she aims to establish a shop and expand her and diversify her products in future. So way ahead, we are planning for is a handbook on family financial literacy, which is under preparation as I'm speaking here, and we would like to get it out in a couple of months, because based on the experience and the base components that was provided from Indian School of Microfinance for Women, the components have been more, being more compressed to address the direct issues of what our clients are facing with. Information campaign will also be done through posters, pamphlets on various financial services. Operational module is also being planned to help the clients know how to open and manage a bank account. And then also we will look forward to in the future for innovative use of electronic and mobile solutions. And the ultimate aim is to have more wiser, informed and alert consumers. If we initiate such a process, there will be automatically a demand for financial inclusion, and the banking system will be more, it will be more easier for them to approach a financially literate person. And it also empowers the poor in basically like building capacities to make decisions and increase their economic space. Whose responsibility is a question for all of us. It is not a responsibility of one particular person. Being a responsible lender, a microfinance institution, it is our responsibility to see and that our clients are well protected from the financial crisis or whatever that is happening around us. So government institutions it is the responsibility because to make the citizens aware. Banks to provide more customer-friendly interface. Financial service providers proper information dissemination so that they are able to make the right choices. Corporates under CSR is also doing for a while now. They are trying to address this issue. Educational institutions can come forward and do some financial literacy program for children and youth. And of course, community at large will be aware about this program, and they will definitely also want to know more about how to make or manage their finances in future. Thank you.
Thank you very much, Vanita. I know you went through that very quickly, and I'm sure people have some questions about some of the things you covered later on, but I'd like to move on to, in a way, our surprise panelist, because she kindly agreed to join this panel later on. She was traveling in Canada before and just got back 2 days ago. So we're delighted that Samandani Kiriwandinia from Sanasa has joined us today to talk about what they're doing in financial education. Samandani, she's the Deputy General Manager for International Relations and Marketing, and this is part of Sanasa Development Bank, which, as I think many of you already know, is a pioneer in microfinance in Sri Lanka and has continued to be a leading MFI here. Her bio is not in the material, so I'll just take a moment to introduce her more formally. Samandani has worked in the fields of participatory development, gender, microfinance, and conflict resolution. And she has a master's in development sociology from the University of Saskatchewan, which I believe is in Canada. Correct? Good. And she's responsible for building Sanasa's international profile in international development and also building partnerships with cooperative banks and other MFIs and bilateral partners. So she has a very, very wide remit. Particularly relevant for today's session is that she's also a board member of the Sanasa campus, and this is a major educational institution here in the microfinance field in Sri Lanka, and one of their key streams is financial education. So we're looking forward to hearing from Samandani more about their experience in financial education so far, and also maybe a little bit about what they're planning to do.
I'm very sorry to let you know that I don't have a prepared presentation because I actually got this invitation yesterday afternoon, and I was specifically told that the time is limited, therefore I shouldn't be making presentations. And I was actually prepared to answer any of the questions, so I will save more time for any question that you would like to ask about the kind of things that we are doing. I just would like to, I actually just briefed to see what the topic is all about, and just to so that we can pull things from what Sanasa is doing, so that we can share with you. Theoretical aspects of financial literacy has been covered very well, widely, and which is quite relevant to Sri Lankan context also by my colleague. So I don't need to go into all these things. So whatever that was presented in the previous slides in terms of SHGs in India is quite relevant to Sri Lanka, and we've been doing quite similar activities in the last 30 years. Just to give you, just to focus you on where this sharing comes, the kind of activities that we are doing in Sri Lanka. I am coming from Sanasa Development Bank, which is a bank formed by a microfinance network that has been operating with cooperative microfinance in the last 30 years in Sri Lanka. So most of the financial education experience that Sanasa is having, and which I would like to just share some thoughts with you on the challenges that we are facing when it comes to financial literacy, are coming from some from the bank experience, but mainly from the movements experience. So we have about like some solid 1,000 Sanasa societies all around the country, including eastern and northern provinces. And also it's a wide network, and the network has been there for 30 years, which is cooperative societies. So people who know, I guess cooperatives would know that it is a certain number of people coming together as members, little bit bigger than SHGs, but it is the same kind of concept. So nobody goes and form the cooperatives. People themselves come together and form these cooperatives, and then they learn among themselves how to do this banking business. So they put their money together and they get the credit out of that pool. So our essence of Sanasa banking activity started with financial literacy. So basically, it's we started in the rural areas in Sri Lanka. It's all over the country, and all the rural community that were not banking, like doing banking, and were not recognized as bankable people, were putting together their money, and are learning how to do how to keep records and how to keep books, and getting some education on financial, as well as training the members on personal finance. So how credit discipline, how to manage their savings, how to do the thrift activities. So these are the foundations, and I guess the fundamentals of Sri Lankan microfinance sector. I'm sure the same in India and Africa. I just met about 14 very strong African microfinance organizations. Most of them are doing the same thing. So financial literacy, although it is a new concept in the microfinance, this kind of forums is not a new concept for the people who have been doing financial literacy, microfinance activities with the poor people. So because it is, and I know, I just want to put just two concepts that are, coming to be new, and like people are talking, in newer way about these things. One is inclusive finance. The other one is the credit plus activities. So I think just a thought that I would like to share with you is that if we are thinking of whose responsibility it is for financial literacy, I think we need to take that question a little bit behind and say that why are we doing this thing to begin with? Why are we doing microfinance? Who are we to do microfinance? And that will give you the answer for whose responsibility it is. So if we are doing microfinance to make sure that people who are vulnerable and who are not having access to the formal banking services, pull them back and have some even kind of evenly distributed economy in wherever we work, and have some responsibility and bridging the gaps. So if that is what we mean by inclusive finance, I think it is the responsibility of the people who do that and who make profit. So indirectly and directly, it's microfinance organizations that do business, and banks who are interested in doing microfinance. I think it is a clear responsibility of starting with the people who make profit out of banking with the poor, that they make sure that poor are not just used as pawns to, in channels. So